Rating agencies are still getting on investors' nerves. The banking sector was hurt on Tuesday, and this factor, alongside rising yields of US Treasuries, entailed losses of the benchmark stock indexes. Investors are braced for yet another turbulent day as the Fed's minutes will influence market sentiment. On a Tuesday, the major stock indexes came under pressure as the banking and energy sectors plunged by more than 1%. The Dow Jones dropped by 1.02%, the Nasdaq tumbled by 1.14%, the S&P500 fell by 1.16% to close at 4,437 points. The index closed below its 50-day moving average for the first time since March. Futures on the stock indexes traded at yesterday's closing levels, but they rebounded in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,410 and 4,480 points. The U.S. Commerce Department reported yesterday that retail sales increased by 0.7% in July, stronger than the expected 0.4% growth. It proves that the U.S. economy remains on a sound footing. In this context, yields of 10-year Treasuries rose to the highest level in nearly 10 months on Tuesday. Stocks slumped in a parallel. The culprit for the fall in the stocks was the banking sector, which was hurt the most by robust retail sales. Fitch Ratings agency warned that it could downgrade ranks of several banks. For this reason, shares of JP Morgan Chase tumbled by 2.5%, and the Bank of America dropped by 3.2%, and Wells Fargo fell by 2.3%. Shares of regional lenders PacWest Bancorp, Zions Bancorp, and Western Alliance Bank fell by 3.7% to 4.5% after the Federal Deposit Insurance Corporation's proposed review of a legal framework. The S&P banking index hit a one-month low, down 2.75%, while the regional banking index also plunged by 3.4%. All 11 major sectors of the S&P 500 declined, with the energy stocks losing money due to lower oil prices. Technology stocks coped slightly better. Nvidia shares were up 0.4% after UBS and Wells Fargo raised their share price targets. Besides, General Motors shares slumped by 2.3% after Berkshire Hathaway cut its stake in the automaker. On a Wednesday, U.S. stock index futures traded lower ahead of the minutes of the Federal Reserve's July policy meeting. While investors expect the Fed's monetary tightening to be coming to an end, concerns remain that the central bank may hold rates at the current levels longer. Traders are betting almost 91% on a pause in the rate hikes in September, according to the FedWatch tool. At its July meeting, the central bank raised interest rates by 25 basis points and left the door open for further increases. Then Jerome Powell underscored the signs of disinflation and said that the further policy moves would depend on incoming data. Recent comments from several Fed policymakers indicated a growing rift between those who believe a longer pause was appropriate and those who advocate for further tightening. Today's publication of the minutes will help traders to understand the stance of the rate-setting committee, so market participants will try to get an idea for the future trajectory of rates. At the same time, the reaction of the market may be subdued since the Fed will meet at the end of August for its annual conference in Jackson Hole, where policymakers' opinions will be based on a fresh picture of the US economy. As for the economic calendar, some reports were rather upbeat. Building permits in the United States inched up by July 0.1% from a year ago to 1.442 million, and the consensus had suggested a higher rise to 1.463 million. Moreover, housing starts increased by 3.9% last month, after a slump of 11.7% in June. In a separate report, the U.S. industrial production expanded sharply by 1%, following a 0.9% fall a month ago. The reading is beyond the consensus of a modest 0.3% growth. The expansion mirrors a sharp increase in car and spare parts manufacturing, mining, and utilities. In the corporate sector, Target owned intraday intention. The company's shares jumped by 7.2% in the pre-market trading after the major retailer's second quarter earnings surpassed full-year guidance. Bigger competitor Walmart, due to announce results on Thursday, was also up nearly 1% before the opening bell. Mega-cap stocks were mixed, but Nvidia surged by 0.8% after Piper Sandler became the latest Wall Street brokerage firm to raise its share price target ahead of the chip designer's earnings report next week. Tesla fell by 1.8% after the electric car maker cut the price of its premium Model S and Model X vehicles in China by more than 6%. Coinbase gained 5.4% as the cryptocurrency exchange received regulatory approval to allow US retail clients to trade cryptocurrency futures. The currency market traded with moderate volatility, and popular currency pairs got stuck in sideways channels. The US dollar index traded at 103.20, a 0.02% uptick higher from yesterday, and the index is likely to trade in the intraday corridor between 102.70 and 103.50. The US dollar slipped slightly on Wednesday, along with the Treasury yields, but fresh data on the new housing starts and industrial production also confirmed the health of the US economy. So the US dollar rebounded before the opening bell. The US dollar lost against the pound sterling for most of the day as a combination of stubborn UK core inflation for July on a Wednesday and the wage picture spurred expectations of a rate hike by the Bank of England. The Reserve Bank of New Zealand left interest rates unchanged, but the hawkish message suggested that rates would remain high, hence the kiwi received support from that. The minutes of the Fed's latest policy meeting are due to be released today as well. Minneapolis Fed President Neil Kashkari insists it's too early to say the central bank's rate tightening campaign is over. He said, "I'm not ready to say we are done." The Canadian dollar has been affected by fragile growth over oil prices and the firm US dollar. Yesterday, the loonie found some support from the inflation data that showed acceleration in Canada. Today, the loonie weakened again. The USD CAD pair is now trading at 1.3500 and 0.06% up. The intraday corridor is seen between 1.3470 and 1.3540. Despite the growing likelihood of a further monetary tightening by the Bank of Canada, the loonie is winding down by oil prices. Both benchmark rates sank by more than 1% on Tuesday. Energy investors voiced concern about flagging China's economy, Retail sales, industrial production, and capital investments fell short of expectations. This talked to fears of a lingering slowdown in China's economy, and the People's Bank of China cut interest rates marginally after the publication of a poor economic data. The government data on the US oil inventories will be available later on Wednesday, and the report could give a fresh impetus to oil prices. The crypto market has entered bear territory. Most digital assets are hit by sell-offs today, neglecting positive news. Bitcoin approached $29,000, trading at 0.35% down, and popular altcoins such as Ethereum, Solana, Ripple, Cardano, and Litecoin fell by 0.5% and 3.5%. Bitcoin has been following the downtrend because the US Securities and Exchange Commission delays its decisions on a BlackRock, Fidelity, and other stock Bitcoin ETFs. The standoff with the watchdog dampens market optimism. Good news does not matter to market sentiment. Coinbase said on Wednesday that it received approval to offer cryptocurrency futures to retail customers in the United States in a big win, and the approval was granted by the National Futures Association 2 years after the application was submitted. This is an important milestone that confirms our commitment to regulated and compliant businesses, Coinbase said. CEO Brian Armstrong also said that more US crypto companies could go offshore due to the hostile regulatory environment and Chairman Gary Gensler's approach to stifle innovation in the industry. As for Bitcoin's intraday outlook, the token is trying to settle above $29,000. The asset could trade sideways around this level for the whole day. A more pessimistic scenario suggests a decline to $28,650. A cautiously optimistic scenario indicates a recovery to the levels above $29,350. Keep close tabs on the financial markets on the InstaForex TV channel. Check our videos to be aware of trends and risks, and see you online tomorrow.